Hello and welcome back to the Joss Brown Podcast. I'm Philip Saunders.
I'm Dan Joss.
And today we're going to be talking about the second quarter 2025 performance. So to kick it off, it was a good quarter all around for U.S. stocks, international stocks.
Which was the opposite of the first quarter.
Yes. Yeah, the opposite of the first quarter for U.S. Was international up first quarter? I can't remember.
I want to say slightly.
The U.S. was down, yeah. So the U.S. made a big rebound for sure. To start out, just the total U.S. stock market, the Wilshire 5,000 in quarter two was 11.11%. And then that makes it year-to-date 5.73%.
Yep.
So positive. And then to break that down, that was mostly driven by large cap stocks. The Wilshire 2,500 large cap was up 11.13% in quarter two. The S&P was up 10.57% in quarter two. But the mid and small cap was up. We just had the year-to-date numbers, and that's 4.84 on the year for the Russell Mid Cap Index. And then small cap index is slightly still negative on the year.
Still negative, but not as big negative.
There you go, not as big negative on the year. So large has beat small cap so far this year.
Mm-hmm.
But we would just say own a little bit of everything because there have been times where small has outperformed large.
Mm-hmm.
And even over the history of the stock market, small has outperformed large. And so have a little bit in each part of the market. So that's U.S. International, also positive this quarter. The EAFE index is up 10.58% in quarter two to make it 17.37% year to date.
Yep. So almost, for sure more than triple.
Exactly.
The U.S. returns.
Yeah.
If U.S. up 5 or 6 and international up almost 18.
I don't know if I said the U.S. year over year yet. So the total U.S. stock market 5.73 year over year, whereas the foreign EAFE is up 17. Over 17%. So you're right. So to break that down, European stocks fared better in the year so far. They're up 20.67, and then the Far East is up 11.51.
Mm-hmm.
And then emerging markets is up 11.02% year to date. So still positive, not as positive as those developed countries, but still doing well. And then to go to real estate, that one is slightly negative. The Wilshire U.S. REIT down 1.24% in the second quarter.
Mm-hmm.
And so in 25, almost flat. It's minus 0.25%.
And we know from our portfolios, the international real estate is positive, just like the international stocks are positive.
Yeah, and that's exactly.
Which isn't in this index.
I didn't have that in here exactly.
Yeah.
So international is positive, doing well. And then commodities, quarter two down 4.39% to make that year to date minus 1.18%. So the bond curve still inverted. The 3-month yield is 4.3. 6-month goes down to 4.2. The 1-year yield goes down to 4%, and then the 5-year yield goes down to 3.8%. So still inverted on the yield curve there. Okay. Any other thoughts about performance and what happened in the second quarter, Dan?
It was very volatile.
Yeah.
Because while the first quarter was negative, slightly, I think it was 5% negative.
Yeah.
April came along and it really dropped, and I think it dropped almost 20%, and then it recovered all plus some by the end of June.
Exactly.
So, 5% positive year to date masks that it was
everything that
down
happened.
down 18%, and then a positive 23% to get to that positive 5.
Yeah.
And then all along the way, international stocks were outperforming in some measure because of the weaker dollar.
Yeah.
Which is why we invest outside, because it acts differently than the U.S. at different times.
Exactly. Yep. Diversify your portfolio. Yeah, it's the old adage, and I don't know if it's Dimensional is the one that has kind of coined this term, but stay in your seat. Don't get up, don't sell too early. Stay in your seat for the entire performance, if you will, of the stock market.
Yep, stay in the market.
Stay invested over the long run. And when there's those 20% drops in the market, have the, I guess, courage maybe to rebalance and buy what's low.
Or the discipline. And
the
we
discipline,
did
yeah,
that. We were adding to equity in April.
Exactly.
For many clients.
Yep.
And realizing losses.
That's right.
And now those opportunities are gone. At least
you got to take advantage of them while they're there.
That's right.
Yeah.
And so our discipline is to rebalance and to realize losses as opportunities come along. We know that some just wait to the end of the year and see if there's opportunity to realize a loss before the end of the year for tax purposes. Well, we've already grabbed some losses for many.
Yeah, so we're doing it throughout the year.
Yeah.
Absolutely. Yeah. Otherwise, in terms of other news, second quarter unemployment remained low. There was 147,000 jobs added in June. Inflation rate remained low at 2.4% year over year per the latest report. Corporate earnings were strong. Although consumer confidence is declining, but spending has remained somewhat steady. And so in other news, we've heard the tariff talks. We've heard the tax bill talks. There will be more tariff talks. There will be more tax talks, I'm sure. But all through that.
Yeah, someone asked me recently, this weekend, about the tax bill that was passed last week. So someone said, well, you must be, everyone's asking about it. What's up? It's like, well, let's just wait because software has to be developed for all those tax programs, and some clarifications will come.
Right.
So, yes, it was passed, and yes, things will work into the returns that are due next year, and we still have 6 months to plan for it.
Yeah. There's a lot of questions still to be answered about that. Yeah, absolutely. Yeah, so to sum it up, there was a Winston Churchill paraphrase that I read: buy and hold and understand that we don't know anything about the future is the worst investment approach, except for all the others. So it's kind of a funny quote there, yeah. But just saying that buy and hold it's the best we have so far. That's the one that's tried and true, and it's proven itself over the long run.
Yeah, and as investors, we get that, and we're not traders, and so we don't have to worry about what happens in the short run.
Yeah.
What happens in the short run for our clients and their economy, we have cash available for that.
That's right.
And if we have some extra cash and we don't need it for a while, that's what's invested.
Exactly. Yeah, and so remember what your goals are. Remember your time horizon, what you're investing for, if it's for retirement or for your kids or what have you, and know what that is. Set an investment policy and stick with it over the long run.
That's right.
So
good.
Yeah, I think good. All right. Well, anything else?
Yeah, it was a good quarter.
Okay, that's right. Well, thanks for listening, and we'll see you next time on the Josh Brown Podcast.
Thank you for tuning in to today's episode of the Josh Brown Podcast. If you'd like to see more episodes, visit our website at joshbrown.com.